almost there. It's spilling all over the place. That's how we do it in Bruges. Gee whiz. Alright, pray my wife doesn't come down and yell at me. There's milk all over the floor. Sorry guys, I get up early and it's worse for me. Okay, hang on. Pop out chat. Almost there. Cool, so how are you doing? Well, it's not popping out the chat. Hello. Pop out chat. So good morning, comment allez-vous, how are you? Ni hao ma? Getting the chat ready. Yeah, boy, Thursday. One of the best days of the week to trade. So yeah, YouTube's not working very well these days. So it says there's 6 people watching, but of course there's significantly more than that. So that's kind of weird. Waiting for chat to catch up. Got my latte spilled all over the place, even on my laptop. Oh, that's good. Frothy. All right. Cool. So, hey, it's a Thursday. It is the 21st of May, 2020. Let's go. Never mad at the fact he's corrupt like a senator. Sold in a rope, but you treat it like soap in a rope. My beats, my lives are so dope. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. Nice to meet you. Ow, 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 ow. Careful, bro. Dude, seriously. Hey, well, nice to meet you. My name is Wayne. I'm a currency trader. I've been doing this for a couple of decades. And Trader's Way has asked me to swing on by, teach you how to trade Forex. Why? Hey, if you have some education behind you and you've developed some skills as far as technical and fundamental analysis, maybe even trader psychology, you're more apt to be successful. You're more likely to be profitable. And that's the type of trader that Trader's Way wants, because think about it. A failing trader pops a couple $100 into an account, blows it up in a month trying to get his yellow Lamborghini, and then they go away and, like, it's expensive to find a new client. What they would rather do is have a client log in and trade profitably year after year after year after year after year after year, because now it's a real business and it's a real symbiotic relationship. It's just better business. So please join a company that prefers to have a better business. And that's by making you successful by investing into you up front. Say thank you, Traders Way, for supporting the Forex.Today community. And you show that thank you simply by going there today, opening up a demo account, and giving the opportunity to earn your loyalty and your respect. The spreads are narrow, right? The spreads are narrow, the swaps are huge, execution's fast. Give them a chance. So welcome to Forex.Today. Rules of engagement. Treat the other people in the chat with dignity and respect. It's good to have fun, but this is our business. This is my office. So try to be as professional as possible. And I would like to take the opportunity to thank you for all the effort that you put into being a success. I thank you for being here every single day. I thank you for the effort you put in. I mean, there are really serious, good people in this community. So thank you for being part of Forex.Today. If you need resources, like in the description below, there are links to my book, a link to Trader's Way, a link to the video training courses that are still 80% off, a link to my trading platform, or my chart templates. MT4 now has an auto installer. I haven't announced it yet, but you know. And whatever, there's tons and tons and tons of resources available in the description below. Check it out. And then please have the common courtesy to click the like button. Okay? Your mother would be disappointed if you didn't. She raised a good kid, right? Click the like button. Common courtesy. All right, my oh my, WTI. So, hey, so what? About an hour ago, we get to an open of a market and looking at what's going on. Lying naked on the floor. Illusions never change into something real. I'm cold and I am ashamed. Lying naked on the floor. So just paying attention to see if anything happens over this time frame. Trying to get this set a little bit better for you guys. All y'alls. Let's get this set up right. Cool. And a little down, I think, right? A little down. Nice. Perfect. Oh, we got the static again, huh? Wonder what's doing that. So you guys say it's the cable. Just by, maybe if I put this the other way, maybe that's better. I don't see why it should be, I don't see why it's conflicting, but every once in a while I do this and you say it goes away. Okay. Yeah, so did you read the FOMC statement yesterday? I probably still have it open here somewhere. Do I? I do. So look, I actually do it. So this is the FOMC. Okay. Yes, you should read the whole thing, but in paragraph 3, it says, almost no probability of the FOMC implementing negative policy rates. This is the first paragraph, introduction, second paragraph, getting going, and in the third one, they're like, no. So very cool, right? So I don't want to discuss it anymore because here's the thing. There is a moral hazard for me doing things like that. Okay? There's a moral hazard. So I have read the entire report. And some of you have read the entire report. Some of you are thinking about it, pondering about it, adding it to your bias, maybe changing your bias, maybe confirming your bias. But here's the thing. There's a moral hazard where if I do it and then tell you what I think, now you're not going to do it. You're even more not going to do it. So I just keep telling you, you know what? There's fabulous information that will help you become a better foreign exchange trader. And all you have to do is download it. They release it for you. There's a link. You can read it on the webpage. You can download it as a PDF and search, which I do. And it's super easy, takes very little effort, doesn't take more than 10 minutes of your time. And yet we know 95% of traders won't do it, but we also know 95% of traders fail. So that's why I don't want to do it for you, because it's easy to just say, well, Wayne will just tell me. No, I won't. I'm telling you, you should do it. Okay? So I hope you appreciate that, right? I hope you look at that as a good thing, not a bad thing. All right. So anyways, I'm trapping oil here on a 1 minute chart and seeing what kind of movement it is. I'm kind of framing this now, top and bottom. Okay. Justin says, got to separate the economics from the role of the Fed. Are lying? Why would they lie? Cool. Yeah, right, Anthony? Just tell me what to do. Just tell me what to do. Take a real estate course, get licensed in real estate, and you can do things like, don't you just love the closet space? And isn't the lighting in this room to die for? I think your kids are going to like this. I gotta move. Give me the juice. So anyways, I'm just watching this this open here. So good morning. Hey, I bought a bicycle. Yeah. So I'm going to lock that in the garage for 8 years. Hey, YouTube, everything. I'm just picking on you. Yeah, if you really like this one, I think you need to put down an offer quick. My contacts tell me that there's another one on its way. We want to go in strong. Let's do a 30-day close, and I think that'll really attract them. I think you're going to have a competitive... Hey, we all got to have a pitch. There's no doubt. We all got to have a pitch. Okay, so this is 1 minute chart, guys. 1 minute on oil. Yeah. Yeah, it's true, right? YouTube, everything. Actually, I think what I'm going to do later in the road, maybe in 5 years, I think I will get my license. Just for something fun. Justin says the Fed could be lying about negative interest rates. Why? Why would they do that? How often does the Fed come out and say in crystal clear terms? All the time now. Yeah, since Ben Bernanke, all the time. And so, like Justin, for example, on Sunday, he was interviewed. So remember, they would have scheduled all of this well in advance. And he came out on Sunday and said they're going to do whatever they take, whatever it takes. If they need to spend more money, they got all kinds of tools, but probably not cut interest rates. And knowing that on Wednesday, they're going to see that. He came out and actually told us on Sunday what Wednesday was going to say. Okay. So yeah, Justin, modern central banking policy, modern central banking theory is to be extremely transparent. And I would say Jay Powell's Fed might even be too transparent. So again, Justin, Fed meeting minutes came out on Wednesday, but on Sunday he came out and told us what it was going to say. Like, they're so transparent, and there's no reason to lie. They don't want to lie. They want to be the opposite of lying. Okay? Okay, it's almost too transparent. Like it's like on the first date, you're like, okay, I love you and I want to be with you the rest of my life. I love you so much. I can prove it. I'll break my finger for you. Snap. I'd like to get married. I'd like to have 3 kids. Their name is going to be Justin. Justin, right? And you're like, whoa, this is the first date? You're like, oh my God, right? It's a little too much, right? It's just a little bit too much. Okay. Jaime says, Jay Powell's Fed is just a printer. Well, he inherited that, and it's not his fault. I'm not a big fan of the Jay Powell administration, so don't get me wrong, right? Okay, don't get me wrong. But there's not much else that can be done in this situation. Okay. What do I think of South Africa? Well, we'll take a look. We'll take a look. So 32.27, 32.54, just kind of waking up. Very nice. So one thing I want to mark is 7 o'clock in the morning, which was... Oh, wow, I snapped it right off the bat. Right there. 7 o'clock in the morning. La la la. La 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 la. 7 o'clock in the morning. Cool. So this is where bears have to get going. If you're bringing oil down, this is it. You got your resistance. You are 2 standard deviations from the mean since, I don't know what this is. Basically, well, we'll call that London Open. Although this is London Open, right? 15, no. Anyway, somewhere in here. This is probably London Open. So we're 2 standard deviations from the mean since London Open. So if you're a bear, this is your giddy down, little doggy. Okay? And bulls have obviously bought already. So what a bull kind of needs is a breakthrough pullback or a dip and pullback. But a bull is going to be keeping their eyeballs. They're eyeballing this. You eyeballing me, boy? Right? This is what they're eyeballing me. And I got that Georgia thing down. When I say it, it scares the crap out of me. Okay. Yeah, welcome to the live stream, y'all. All y'all. Yeah, Helicopter Ben had things pipping. Now, Ben Bernanke and the 2008 financial crisis was very much more significant and complicated. 2008 was extraordinarily difficult. We really came to the precipice of the end of capitalism. It was that close. COVID-19 on a human level has significant more impact, like people are sick and dying. But the economic situation is fairly easy to fix, assuming people get better. Now, if people don't get better, or if there's more waves, then companies start going bankrupt, and that's going to be a problem. But right now, like Disneyland is submitting plans to open today, in fact. And what's the other one down there in Orlando? Studios, whatever studios. They're pitching today as well on how to open their theme parks. So we're getting to that point, right, where business is getting back. And so, a bunch of businesses have a bad year. Maybe next year's mediocre. And then, 3-4 years from now, business will be exactly the same it was, right? Yeah, Universal, thank you. So, right? So in 3, 4 years, everything will just be normal again. 2008 was much more complicated. Okay. Okay. Well, it's funny, Des. I don't trade either of those. I use them for relative strength, but I don't actually trade either of those. I'm a macro trader, not a relative strength trader. I look at them, but I would never trade them. So, so anyway, so that's comparing sort of Jay Powell to Ben Bernanke. Now, you know, the Fed spent $4 trillion. Wow. And they did it like right off the bat, right out of the gates. And the federal government spent 2 trillion, and they're probably going to put down one more. I don't know if it'll be another T, but So, anyways, there's at least $6 trillion spent in like less than a month. So it's pretty extraordinary. Okay. Yeah, Javier says, yeah, when these companies start opening up, that's where it gets interesting. Yeah, and so now I'm trying to decide how to analyze sort of the next move in the market. So, a rising tide raised all ships. NASDAQ is up for the year. Think about it, guys. We had a 30 to 50% decline in the stock market. Those that are in the NASDAQ are actually profitable this year. Okay? So now the next wave of analysis is, when are people going to buy a $600 Yeti cooler? They might actually buy it now because maybe they didn't lose their job. Maybe they had a professional job where you could log in remotely, but of course their lives are impacted. And then the government gave them money even though they didn't really need it because they didn't actually lose their job. They're working from home. They're not sending their kids to school. You know how much money we saved just because we didn't send our kids to school and they don't have to do all trips and fundraisers and all this other stuff, right? Where you don't have to buy all fancy clothes all the time. We actually saved a ton of money by not sending our kids to school. It was pretty interesting. And so now all these, let's say, people that didn't lose their job but did work from home, they got to get out and they want to do things they used to do. But now the government gave them a couple of $1,000. So they're like, I'm going to go buy a Yeti cooler, $600 Yeti cooler, And so it'd be interesting to watch those types of things. Like, did people save their money? Did they pay down their credit card? Did they pay down their house? Well, the people that did lose their job, they spent it on food, right? And rent, maybe rent. Wealthy people, it's weird. Like, they probably didn't need the money. So what are they going to do with it? And that, if they spend it, because if you had money, you probably didn't have credit card debt and and all that kind of stuff. And you don't pay rent. You own a house, so you get tax write-offs and you get capital appreciation and it's cheaper than rent. So, wealthier people might be better off. But here's the interesting thing from an economist. A poor person that lost their job will have to spend all that money. And even if they didn't lose, they're going to have to spend all that money living because it's complicated and expensive to be poor. So they're going to spend the money. This is what you're looking for as an economist. If people save the money, it's actually bad for the economy. Okay? It's bad for an economy. So if they go out and spend it on groceries and diapers and all that kind of stuff, cool, right on. Because that enters the money supply very quickly. Like, one of the things we've talked about recently and way in the past, back in 2008, is the trickle-down economy. When J.P. Morgan gets gets the money from the Fed, that's one thing. But when does the average Joe get the money, right? Well, if they need the money to buy stuff, they spend it immediately, and it immediately enters the economy. And that's one reason it's actually interesting for the government to give you money and put it in your account, because you're more likely to spend it. When the Fed increases in the money supply, they're doing it at such an extraordinarily high level that you don't literally see the money, but you sort of, it enters the economy slowly, right? But if you just get $3,000, great. And if you buy groceries with it, boom, right? That enters the economy, and that's good for everybody. Because if you spend the money, it's somebody else's income. If you spend the money becomes somebody's income. So you go to the grocery store and you buy $100 worth of groceries with your free money from the government. That's $100 in revenue for the grocery store, right? Which then pays for people that work at the grocery store. Now it's their income, but also the grocery store bought all their inventory, so it becomes income for the suppliers, which becomes income for the producers, which, it moves through the, right? So here's the other thing. Wealthier people might have got their free money from the government. They didn't have credit card debt. They're not stressing. They didn't lose their job. They just work remotely, right? So I'm not talking about billionaires. I'm just talking about someone that didn't lose their job, but the government gave them $3,000 anyways. So what are they going to do? Well, if they go out and buy a $600 Yeti cooler, they're not poor. Okay? I mean, I met an Uber driver in Boston that's got thousands of dollars in Yeti coolers. I couldn't believe it. It was like $30,000 in coolers. I just flabbergasted. And he's an Uber driver. So anyways, but if someone goes out and spends it on luxury goods like that, right? Then what happens? That money enters the economy. And so the Fed money helps the banking system, and their credit facilities help the corporations, but the fiscal spending, the free money from the Trump administration that goes into your bank account, if you spend that, it's other people's income and it becomes their jobs and all that kind of stuff. So it actually becomes very interesting. Okay? So that's where we want to track the spending. Okay. One of the reasons we're looking at this is in the live group, someone asked me about trading oil, and he's like, I got a full-time job. I don't know when to trade oil and all that kind of stuff. And I said, well, show up at 7 o'clock. And I said, by 9:30, you'll have more than 50% of the average daily range. You're welcome. Okay, cool. Let's move on here. Okay, this is an exit zone. You should be aware of that. Okay, the middle line is the median. The bottom area is 1 and 2 standard deviations, right? AKA oversold. And the areas above is 1 and 2 standard deviations above a mean. 68 and 95%, 68 and 95%. So now what we're looking at is this is 2 standard deviations below the mean. High probability of a retracement, right? Back to the mean, this is a regression. But what it did is it went from 2 standard deviations oversold to 1 standard deviation overbought, back down to the mean. So now the big question, if you're a bull, you're probably going to look for something like this in the future, okay? And what would a bear look for? Well, they would want to sell high, right? So they're gonna probably extend this out, right? And that's probably what we're looking at here. So we don't know which one is which, of course, but let me show you what both parties are thinking. Okay, this team is thinking this. Okay? And the other team is thinking this. Which one's right? I don't know. Financial Times says Argentina's on the brink of default. Dude, Argentina's been on the brink of default for 30 years and has probably defaulted, 4 times? It's always on the brink of default. So thank you, Financial Times. That's really an amazing deep dive analysis. Straight into the weeds, deep. 1, 2, 3, foot in the water. Right? Yeah. How does one trade this? Well, I don't believe the Argentine peso is easily traded because it's not liquid, and I don't even know if they're pegged to the dollar still. The saddest thing about that is essentially socialism. Okay? It's the consequence of socialism. Corrupt government down there, whatever. It's the political model the country chose after World War II. The Soviets got in there, right? So here's I have a grossly generalized opinion of the entire history of Central and South America over the last 500 years. Okay, I think it was a perfectly wonderful place, probably paradise. And then the Spanish came in and raped and pillaged and destroyed everything, right? And then what? The English came in and destroyed, raped and pillaged everything. And then the Americans went in and raped and pillaged and destroyed everything. And the Soviets then went in and raped and pillaged and destroyed everything. And the last one in there were the Soviet socialists, right? And we're still stuck there. They closed all the borders. Free trade broke down, and there's no benefits of capitalism and all that kind of stuff. And, before World War II, Argentina was something like the 5th? No, it was probably more like 10th. Let's say the 10th richest country in the world. Let me say that again. Before World War II, Argentina was the 10th richest country in the world. It has beautiful natural resources. It has a beautiful climate, a deep and rich culture. They called it the Paris of Latin America. It's basically California. Okay? Now it goes bankrupt every 5 years. So I have friends down there, and they'll tell me stories where they wake up one day and half the money out of their bank is gone. The government repatriated it. They just took it. Yeah, so I'm saying wonderful things about Argentina. It's not the Argentine people. I don't even know if it's the government. If it's the government, it's only the consequence of socialism. But socialism just doesn't work. It just doesn't work. It's failed. It's failed every single time. Socialism has never worked. Now, capitalism is flawed. And this is, you want to know George Soros. George Soros messes around with capitalism because he loves it. He's a capitalist. But he messes around with it because it's obviously flawed. Okay? It's obviously flawed. So I'm not saying like capitalism is perfect. I'm just saying socialism is completely flawed and 100% guarantee of failure. It's never once worked. In the last 200 years of trying, it hasn't worked ever. Okay? So then you look at capitalism, the next best choice, because it does work, but it's got some real risks and some major flaws. And so George Soros goes out of his way to point them out, not because he hates it, but because he loves it. And he's trying to show the flaws, okay? And now it's not the same type of flaws that you think. So like if you read more modern Nobel Prize winners, the Nobel Prize thing has become very politicized, and it makes me sort of cry internally. It's a real shame. But so now to win the Nobel Prize in economics, you have to have a sort of a certain point of view of the future of capitalism, which I don't think is helpful. So Piketty and Stiglitz, they'll say they're working on one angle of the flaw of capitalism, and that's, some people become fabulously wealthy, and many, if not most, don't. Okay? Now, if you just leave capitalism to do what it does, what happens is the worst off actually become a lot better than the alternatives. Okay? So basically what happens is you get a middle class, and even the poorest class move up. So now you're super poor, but you live in a house and you have a TV. Now, you might not have much more, but it's better than living on the streets, right? And hey man, go to India and see what it's like to be poor. Okay? So the government tries to go in and like make things more fair, but capitalism isn't about, well, there's a sort of a true equality of opportunity, which I always fight for, because I think entrepreneurialism is a form of capitalism that works best. If you give someone the opportunity, like if you're like, hey man, you can become an Uber driver and work whenever you want, 24 hours a day, 7 days a week, or whenever you want to work, you can work. And you can be an Uber driver and you can be a Lyft driver. And, and I think there should be apps like, maybe all you do is mow people's lawn. So I pull out my phone and go, I need someone right now to mow my lawn, and someone shows up, right? Like that kind of gig economy, I think, is the best part of capitalism and entrepreneurialism, because then you can be as rich or as poor as you want, or as you're capable of, right? Depending on certain skills and all that kind of stuff, but at least you can do whatever you want. And then things kind of break down when you're like, well, these people need this extra, and so we'll take from those people and give these people. And that's where I think when the government kind of gets in and sort of messes with things, capitalism becomes more flawed, right? Yeah, well, liberty, yeah. So liberty and, like, for example, libertarianism. And we might study this, like when I do either my, I think when I do the book club, if I can get that pulled off. One of the things we might study is libertarianism, because most people don't understand what it is, and the name doesn't do it any justice, because it's very confusing because they think of liberals. Well, that's not libertarianism. But it's very interesting if we start to read like John Locke, for example. And you get this idea of ownership, personal ownership. And then you would move on, and eventually, when we're discussing liberty, if you're the next extreme, let's say, to that would be Karl Marx. And now people don't want to read Karl Marx because they think all bad things too. Well, he was just pitching a different economic system, and he was saying things like, rent is evil, and that's an extreme which, I think is proven not to work. And then the other extreme is like, everything I own is mine and you can't have it, and I don't pay anything to anyone else. And if I grow corn and my neighbor is starving to death and I have more corn than I could possibly eat and it's just going to go rotten, but I don't care. It's my corn. He can get his own damn corn. Well, that doesn't work either, right? And so you want to find that middle ground. And capitalism's really good because it says, hey, corn farmer with excess corn that you're not going to use, why don't you sell it to your neighbor and be compensated for that, whatever, let's say, good investment or better technique to have this excess. Why don't you sell that off to your neighbor, because he needs it, and he would trade money for all the for the good that you did, so that he can take, and all of a sudden you get this trade. And when countries start doing this, you have global trade, right? So like one of the things we studied was a situation where, I forget the countries now, El Salvador and who was right next to it? El Salvador. What country is right next to El Salvador? Was it Honduras? Anyways, two countries, right? At one point in history, and I think it was like in the early 60s, they closed their borders to protectionism, to protect their own local businesses. And it was a good socialist pitch, like, you don't need El Salvadorian hot sauce. And that's what we studied. And so, we should make our own hot sauce. Why give the El Salvadorians all your money, right? And so they closed all the borders. And of course, we know by the 80s, both of those countries were dirt poor. Dirt poor. And what leads to that? Lack of trade, closed borders, lack of specialization, lack of economy of scale and economy of scope, which often free trade leads to. And so to understand all that, you might want to read Machiavelli. So there should be lots of very interesting things that we can do here to learn about sort of the history of economics. And like, I don't blame the Argentine people. I look at it and say, what a shame, because you have this wonderful, wonderful, wonderful country and culture and history, the Paris of South America. Oh my gosh, I wish nothing but the best for the people of Argentina. Okay? Has anyone been to Baku? in Azerbaijan on the Caspian Sea. Baku has the largest opera house in Europe. Why? Well, it's an area that produces oil. So between World War I and World War II, it became fabulously wealthy producing oil. Literally built beautiful buildings and institutions for the arts. Okay? Beautiful, just fabulously wealthy. Okay? Imagine sort of like a Dubai of the day. Okay? Yeah, I'm not talking about morality. Oh, man. But anyways. So, it was fabulously wealthy living in a capitalist system where they produced oil and sold it, became fabulously wealthy. Then the socialist pig dog Soviets went in there, and when the Iron Curtain finally fell, and Azerbaijan opened up to the world, all of it was gone and destroyed. Just left to decay. They had the same oil, but all that beauty that was built on capitalism and all that, support for the arts and culture of the Azerbaijani people, and of course the local rich European white men that made most of the oil, right? All of that was gone, and nobody had anything. So when you look at things like this, and you're trying to develop, let's say you're trying to design the right sort of political institution for your young country, and also the economic system that country will deploy, you have to look at these things and find your balance, right? Because if you're pure capitalism, some people are going to have access to fabulous wealth, and many people won't. But the question is, are the worst off better? Like, do you care if 5% of your citizens are billionaires, and let's say 20% are poor? Does it matter? Well, how poor are the poor people? If you got rid of the billionaires and the poor people were more poor, then the few that happen to be billionaires are somehow dragging everyone up. Okay? Or you go to a different situation and everything beautiful and amazing about entrepreneurialism and passion to create, it is all killed, and everyone becomes equally drowning in poverty. Oh, is that right? Well, if I've insulted anyone about, I have not been to Baku's, but I would definitely like to. Okay? So how would you design your country if you were in charge of Argentina with beautiful natural resources and a very large educated population? Like, what the hell's going on, Argentina? You have everything you need to succeed. So what are you going to do about it? How would you do it differently, right? How would you do it differently? In my opinion, if you understand economics and politics, so that's called international political economy. So I've done an IPE class, which is the global study of the differences in political and economic institutions, if you will, and models. If you understand those things, then you have a better understanding of cause and effect. That's why I bring that up. Okay. Am I a millionaire? Well, everyone, let's say in California, is a millionaire, but they're poor. So that's not a very good question. Do I have enough money to impress you? I don't know. I don't know what impresses you. You know how people say like their houses have 2.5 bathrooms? I have 2.5 kitchens. Is that enough to impress you? I don't know. Probably not. I thought you were here just because I was beautiful. So, anyways, yeah, dumb questions. But whatever. You're beautiful. You're beautiful. You're beautiful. It's true. Can we look at lyre pairs? Yeah, we can do that. Yeah, economics is most of you guys might want to study finance, though. So I already have my economics degree, so I'm not taking any more economics classes. I haven't done it in years. But I'm also a finance major. So my master's degree is in management of finance. And so, like in June, my last two official classes, I'm sure I'm going to take more. But my last two official classes are in venture capital, which I already know because I was a venture capitalist. So I can't. I'm very interested in seeing how it's changed in the 20 years that I haven't been a venture capitalist. So I'm very interested in that, and maybe developing relationships with people in the class or the professor. But that's obviously finance, not economics. And then the other one I'm doing is commercial real estate financing. So issuing bonds and developing REITs and that kind of stuff, which is, more of a capital markets class, which I'm very interested in. Okay. So some of you guys, I think, would like that better. Economics, macroeconomics I just like because it just comes down to a basic thing like is country A producing and is country B um, acquiring those products, and we just follow the money around. Yeah, the dreaming of socialism. It's a really good sales pitch. Vote for me. You don't have to work. I will take care of you. You will get stuff for free. It's really difficult. That's a real, I mean, that's real. It's a real sales pitch that it just, it doesn't work is the problem. Hope says, yes, sustainable finance. Yeah, that is interesting too. So one of the things that I did do is my professor in it was ecotourism was the actual heading of the class, but my professor does things like with the World Bank and the United Nations and stuff. She was really powerful in the industry, and I learned a lot from her. And of course, she's an expert in things like sustainable finance, not necessarily like the micro loan angle. Although a friend of mine did start a micro loan company, but she taught me sort of more the ecological side of sustainable finance, and it was really, really interesting. And so a few years ago, as I traveled around the world and traveled around the country, even with my wife and kids, every time we were at a hotel, which was a lot, I would take pictures of the ice machines because I was doing research on the amount of money and energy spent on ice machines. And so I actually have pictures of something like 20 hotels around the world, their ice machines. So I know the brands and all that kind of stuff and the energy efficiency and all that kind of stuff. And counted in 20 different hotels. It might have been actually closer to 40. But from Hong Kong to Southern California to Virginia to all Texas to, of course, Georgia and Florida. And, and doing all that kind of research, like, primary research, not like searching the web, but actually going into the hotels. It's actually very, very interesting. And I actually proved that hotels could actually save an extraordinary amount of money by being, better at that. Not better ice machines. So I even contacted the Hoshizaki Ice Company, which is one of the largest producers in the world. Stuff like that. Just pretty interesting stuff. So yeah, if you want to get into that, Hope, I think that's a worthy cause. It won't make you a better Forex trader. But if you're going to study finance, you have to have a passion for it and understand how it all works. Okay. So no real moves on Rand here. We're just kind of stuck where we've been. Okay. Yeah, like I said, you should go to Harvard. It's awesome. Right? You should go to, it's awesome. Right? When your professor's like, yeah, when I was working with the World Bank and we were working on this big project over here and over there. So one of the things I would do if I was leaving Forex is I'm very interested in building waste to energy power plants. And I have this goal of helping clean up the Caribbean by mining their garbage, creating clean energy. Now you'll say, well, Wayne, it can't be clean energy if you're burning the garbage. Well, that's true, except the carbon capture can help me get carbon nanotubes. So I can capture the carbon and make a product. And by the way, carbon nanotubes are worth more. Well, gold looks cheap compared to a carbon nanotube. So I can make all of that. But the other output of that process, besides electricity and carbon, is pure plastic. Pure, clean, quote unquote, organic plastic. And I can make hurricane shelters out of it. I can make artificial harbors. There's a lot you can do in the Caribbean, especially when the Caribbean wood is very, very rare and expensive. So what if you could make, timber tech type products to make houses, like permanent type products, or temporary shelters that people can live in for 6 months and then completely break down, lie flat, and can be shipped anywhere. So I looked seriously in it. I've met with government officials to talk about it. I have the science, and in fact, one of my billionaire friends is now doing it. And I'm like, hey man, let me have the Caribbean. So that's something I'm, like, honestly very seriously looking at. That's going to be how I spend my Forex money. So I've been, right? We've gotten to the point where I've talked to the government, I've talked to the central bank, I've talked to investors. I have access to the technology. Pretty cool. Okay. And now I even have I could raise the money and actually do it now. So it's pretty interesting because if one of my friends is actually doing it now. So I literally talked to this guy about 2 weeks ago, and I'm like, hey, I need $1 billion. I want to buy some real estate. And he's like, yeah, I love real estate. I'll probably do it in September. So keep me in mind. I'm like, okay, cool. And then he's like, but right now I got all my money tied up in waste to energy power plants. I'm like, oh my God, are you kidding me? So I pitched him the idea of what I have for the Caribbean, and he's like, yeah, it's really good, but I got enough projects like to last me a lifetime. So anyway, so he's like, so anyways, like these are real conversations. He's like, oh man, so I guess if I would have pitched him a year ago, I would have had it. So, but anyways, he might throw some money in my real estate fund. So it's just very interesting how the world works. So you're going to have to spend your Forex money on something. And once you get enough TVs and cars and kitchens and watches, you're going to have to spend it on something else. And I'd like to clean up the entire Caribbean and win the Nobel Peace Prize by creating a repeatable, sustainable model for doing so. It's actually written down as one of my personal goals. No, it sounds arrogant, but there you go. That's right, Richard. Well, one of my Harvard friends actually, she's a very wealthy person in the Bahamas, and she's interested in stuff like that too. And I originally met her in my eco finance class, and I think I bumped into her once or twice after that. So if I ever was going to do a project in the Bahamas, but the problem is the Bahamas, it's actually too big. I need to start with a much smaller economy and a smaller project, and then I want to build it out. Because to me, I just don't want to build a power plant and start cleaning up one island. I want to do this actually all around the world. And so I'm more interested in building a repeatable model. Okay? And so it would start with one Caribbean island and then another and then another and then start looking around the world. So here's something, right? Like cruise ships pulling into Honduras. They pay Honduras almost no money. The cruise ship probably pumps crap, literally, into their water. 5,000 people get off the boat. They walk around the little town, like 8 blocks worth of stuff. They buy Bart Simpson t-shirts. They drink Corona. They drink margaritas out of a giant plastic cup. And then get back in the ship and leave. Like, dude, this isn't Mexico. And then what? What happens next? Well, the people that support that are not making big money. The cruise ship isn't paying any money to like keep the waters clean. But where does all the garbage go? Do you understand? Like 1 mile out of town, there's a giant pile of garbage just blowing in the wind. And it's not being taken care of because they don't have the money. And it's horrible. So I want to go into like places like that and say, okay, this is a microeconomy and we need to treat this better. And actually band together and say, you know what, cruise ship? If you don't pay us money to clean all this stuff up, you're not welcome here and we don't care because we're sick of selling margaritas in a plastic fluorescent colored glass because that's not the Honduran culture. We'd rather protect our culture, our people, and our environment than sell you a margarita. Okay? So we go in there and create a and we've got to clean all that up and force the cruise ships to pay if they want to play. Then the cruise ships will say, well, then we'll go to El Salvador. Good. Smell you later, dog. All right. I gotta get focused here. Let's go. Let's move on. So here's that oil trade. Okay. Up, 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 down, down. Second move. By the way, I pointed this out to the minute yesterday. I said, this minute right here. Yesterday. Sweden and Norway, actually. But yeah, Sweden, you're absolutely correct. It's developed in the university systems there, absolutely. Yeah, Javier, that would be true of any institution, though, wouldn't it? Can anybody here confirm that last night I gave the advice to a bull on oil that that he should be here ready, willing, and able to buy at that minute? Can anybody confirm that? Thank you, Hope. Thank you. TDG. Like magic, huh? Like magic. Yeah, we'll do all that. Let's do some euro dollar move around. Okay. What you have to understand, guys, is all of these things move together. So if you look at WTI, you already know what Euro USD is doing. So that's where we got to get you better in your understanding of correlation. So WTI is going on. That's risk on. That's weak dollar. That's euro dollar up. That's USD CAD down. That's Kiwi yen up. I mean, it's just like all of this is the same thing. You can look at one thing, and if you're a macroeconomic trader like I am, you have probably an 80% grasp on what everything else is doing. Now, there's relative strength in that. So if Kiwi happens to be weak right now, that's probably not a good example, but it probably is still working to some degree. But, you know, Aussie yen might be going up better. And can you fix that for me? So anyways, they're all interrelated, right? So you sold in an uptrend. How does that feel? Okay. Well, no, WTI comes from a place, West Texas. And it's not light, it's intermediate. But Brent is North Sea oil. Light is actually probably more like Saudi oil, but it would be the same. Yeah, and NP is correct. Like, oh my God, I was so disappointed with the Bank of England yesterday. It really changed my outlook for the entire country. Okay? And then when Boris comes out and says, yeah, we're going to start tracking people's cell phones, I don't like that at all. I don't like that stuff. You're like, no way, dude. And that goes back to John Locke. Right? So that's what libertarianism is. John Locke says, government, stay the heck out of my life. Make sure I have a road to drive on. I'll pay some taxes for that. Make sure you have an army that's available not to go around and mess with other countries, but to protect my private property. I'll pay a little bit of taxes for roads. I'll pay a little bit of taxes for a legal system or an army that protects my private property. After that, I'm not paying a dime for anything. So when the government comes in and is like, hey man, we want to track you wherever you go, and John Locke would say, absolutely not. And you're overstepping your boundaries. Okay? Well, that's not capitalism, because a John Locke would not trade. A John Locke would rather have his corn spoil in the field, his excess corn, than sell it to somebody else. Okay? So that's not capitalism, but what comes from that, capitalism was born, like started from that mentality, and what it's talking about isn't necessarily small government, which is part of libertarianism, but what it is it's private property. You have to have private property to be a capitalist. If you work hard and produce excess, you own the excess, not the king, not the landlord. Okay? So I wrote a paper where the best thing that ever happened to Europe was the Black Plague. Because before the Black Plague and you were a farmer, the landlord owned the land, and you had to pay a percentage of the yield to the landlord for using his land. What percentage do you think that is? Everything you can't eat. So if you found a better method for planting or developed a better tool for farming, your yields would go up, but like it wouldn't benefit you anyways. You're just making the landlord richer. So you never did anything about it. You just farmed, and you were a poor farmer and your yields were low, and the landlord took everything. And then of course the king took everything from the landlord, and whatever, it just didn't matter. Until all the landlords were dead. And the farmers are like, I'm free to do what I want, right? Because now they don't have to pay rent on their landlord or to a landlord. And so they would actually work the field, and everything that was excess, they got to keep. So then they're like, oh my God, now I own this extra wheat, and I can sell that, and I can buy better stuff. And then what if I can get more wheat? So they're like, hey, if I had this better tool, I could cut the wheat faster, and I could have a bigger property, which means I can have more land, which would increase my yield. And then he found out he had so much land that he didn't need to plant all of it because he just didn't have enough. Remember, half the population was dead, so you couldn't hire more people. So you're like, I have to make better tools. But even with better tools, you couldn't use all the land, so you furloughed some of your land. And then next year you planted on the furloughed land, and you got even more. And you're like, oh my God, I have a better technique. I have better tools. I have better techniques. One guy can produce 3 or 4 times as much as he used to. And you get to keep extra. Okay? And that was the birth of capitalism. And all the landlords kind of died off. And then what happened? Business people became wealthy. Farmers became wealthy, and then business people became wealthy as the king. So then you get places like Genoa, right? And Venice, which suddenly had city councils, not of kings and priests, but of rich, wealthy business people. And they started running their cities as states, and you started to form government. Okay? And then because of their wealth, they were able to trade. Well, when a trade ship went away with lots and lots of, with valuables in it, and it went away for 6 months, well, it could be lost at sea, it could be pirated, maybe they get to the port and they get robbed. Insurance got formed, and banking got formed, and trade lending, right, started to develop. Thank you to the Black Plague. Okay. And you can go on country by country by country. Like, what happened to the Portuguese? What happened to the Spanish? It's very interesting. What happened to England and Holland? All right, all these countries had different reactions to this new model. And it's very interesting when you plot this. And now you see like the Dutch got this close to being the UK. But they got screwed over and betrayed and stabbed in the back. And, 450 years later, it's a fabulous country, with stable government, smart, intelligent people, all this kind of stuff. More capitalist than anyone because there's less rules. You can do what you want, and that's part of libertarianism and capitalism, but it's tiny compared to Germany and England, and there's a historic reason for it. It's pretty interesting. Came down to probably one guy, one day, impacted a whole country for 450 years. That's true, right, Javier? But you know what? It didn't take down China. So Europe and China, I would even argue China was richer than Europe before, or let's say about the same. And the economies were very much the same before the Black Plague, right? So let's say 1,000 years ago. China and Europe were pretty much the same. You basically had some sort of king and some sort of landlord and some sort of worker, all intertied, whether they were serfs or some other name. But it was all feudalism of some sort, right? And then, like Italy, for example, wasn't Italy. It was like 100 different countries, and that's what China was like. And eventually, it unified into Italy. Well, and then China unified and all this kind of stuff. So they were progressing about the same. But here's the interesting thing: 50 years ago, China was dirt poor. Okay, and Western Europe was fabulously wealthy. Yet 1,000 years ago, they were the same. And the Chinese have a wonderful history. They're smart, they're intelligent, they're cultured, right? So why was that economy essentially an economy of peasants? Well, Western Europe was fabulously wealthy and highly educated. What was the difference? I tracked it all the way back to the Black Plague. See, what happened was China didn't get decimated, so they still had a feudal system. They're still socialist pig dogs. And eventually they became communist. Even worse, insult to injury. So instead of getting fabulously wealthy, even though they had lots of people, lots of young people, abundant natural resources, right? Their productivity was extremely low compared to Western Europe. And it came down to there was no need to be productive. Why do you need to be productive? Even back in the late 90s, early 2000s, when I was doing VC stuff, I remember one time we went into, we were investing into RFID. That was a brand new technology back then, radio frequency identification. And this is where you can track even a shirt being produced in China. You could track it through the supply chain. Not just a box, but every shirt could have something, a fabric that was, with a little thing embedded into it. But whatever. So let's say either at the garment level or even a box, a particular box on a pallet of boxes and a bunch of pallets go into a container and one container. All this could be RFID'd, right? And so we developed this fabulous technology and all that kind of stuff. And we start talking to the other end, right? The supply end of the supply chain. And we're like, hey man, we need all this RFID so that we could track everything in real time. And the Chinese factories were like, we don't need that. And we're like, oh, you totally need this. This is going to be super important. The buyers want to be able to track things in real time so they know when their inventory is going to show up. And they want to do it not even by the day, but like what hour is the box going to show up? And so we can put it on the shelf. And they're like, oh, well, we'll just hire somebody. If you need that information, we'll hire a dude and he'll stand here and he'll actually walk along with the box. Check, check. Like they don't need the productivity. They'll just hire someone to do it, even if it's totally inefficient. If you want that, we'll hire some dude. And that's sort of, there you go, sort of the consequence of all of that. So I track it all the way back to the Black Plague. Okay. And then what happened? Capitalism came in. China's ridiculously wealthy now. When you go to China, you look back and go, oh my God, America's poor. It's amazing. What happened in 25 years? Capitalism, thank you very much. Okay. Cool. Let's take a look at all yens. That's a more complicated situation. Well, remember, I didn't say communism was bad. I said socialism was bad. I don't know anything about communism, but China's going to be hard to compete with. If their communist government says, we are going to build an airport in the middle of this city, and they just knock the city down and build an airport. Okay, in 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 democracy, you cannot do that. In democracy, you talk for 25 or 30 years and do nothing. In communism, you just do it. And that's going to be extremely difficult to compete with, because here we have to talk about everyone's feelings and everyone's rights, and what about this and what about that, and I don't want a high-speed train to go from San Francisco to Los Angeles. Like, everyone agrees we need this thing. They've been talking about that for 30 years. A high-speed train to go from Los Angeles to San Francisco. It's been planned and budgeted for and talked about for 30 years, and they can never build it. China would do it in 2 years. It'd be done. So it's going to be very difficult to compete with that, because there are very big flaws to democracy. And I think democracy is going to be a big question mark of whether that worked, because that's also a social experiment that's only really 100 years old. Not much more. Not modern democracy. Okay? So that's the more interesting thing. Okay? So, like, for example, the United States is wealthy. Great. That's capitalism, not democracy. We also have a government that, no matter who's in charge, doesn't work. So that's a flaw. Okay, that's the flaw. All right, so here we are, just farting around, stuck. That's why we're kind of have a babble day today. A babble day. There's not much else to do. We've hit our targets. There was the buy on Sunday. There's the exit on Tuesday. It's Thursday now. We ain't going nowhere fast. So we're just farting around. Okay? Aussie, on resistance. Okay, we knew this yesterday. You can buy the dip, buy the dip, buy the dip. Okay? And eventually it should break. And that guess, because it truly is a guess, that guess is made on fundamental analysis of Wednesday's Fed meeting minutes, which I told you on Sunday would be the game changer. So all of this was planned out days ago. That's why there's not much to do now. Okay? La 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 la. Kiwi. Look at this. Kiwi's just waiting. Okay. So we're just there. This is, if it could just get through 66, then we could probably get to 67 and beyond. Okay, we'll see. And again, that's more macro. I'm going to make this one smaller. That's more macro based, meaning yen is probably going to be weak regardless of what happens to Kiwi. And so let's put it this way. And this is sort of the next real test. Okay, so that's where we are now. And then bust this out. So maybe a little higher, up to 67, down to 66, up to 69 and a half. Okay? That's sort of the guess right now. Democracy is the tyranny of the majority. Well, I put it this way. I think 500 years from now, communism, socialism, and even democracy will be gone. We will find a different balance. I think all those models are flawed. Okay? Because eventually democracy will probably end up with socialism. Because you go from not caring about everyone, or anyone, so all of a sudden like, well, we should care for more people, and then it just slowly moves, and 100 years later, you're so worried about everyone that no one wins, right? So all of a sudden, you know, so like, I don't care about fair, I care about equality, and I believe capitalism, and in particular entrepreneurialism, offers the best model of equality. And to me, the most important aspect of equality is not that everyone gets the same. That's not what I'm talking about. Everyone gets a chance, regardless of who you are, what you look like, who your mommy and daddy were, what religion you preach. All of that's irrelevant. Everyone should have equal access to opportunity. Okay? So it doesn't matter who you are. You can step up. That's what I believe in, and that's what entrepreneurialism. It doesn't matter who you fall in love with. It doesn't matter, like all these different things, right? There's no discrimination. And if you step up, you get paid. That's what I want. Okay? So like example, my last paper which I got an A on, I talked about how a company that is truly offering an equal opportunity and is non-discriminatory going into the new world post COVID-19. So I'm writing about right now. They're going to, like JP Morgan, for example, just announced that when people come back to work in the office, there's going to be no more than 50% of the employees in the office again. And when you show up, all your stuff has been packed up and put in boxes and nobody owns a desk anymore. It's all flex space. So when you're in the office, when half the people are in the office, or less than half of the people in the office, you'll sit wherever you're assigned, but you don't own a desk. But the other half of the workers are not actually invited to the office. They will have to work at home. So I was writing about this situation, like who gets to choose who works at home and who gets to choose in the office. And is that a fair process? But also, how can you have a situation where some people are online, some people are offline, and yet everyone's equal? And that ain't going to be how it works. So I argued that you'll have to treat everyone the same by making everyone a remote worker, regardless if you're in the office or not. So if you're two vice presidents working from the office, you have your meeting face-to-face over Zoom, and it gets documented. Even if you're in the office next to each other, you have to create a culture where everything is done over Zoom the same way. If the two vice presidents are 8 feet apart or 8,000 miles apart, it doesn't matter. Okay? And everyone has the same access to training, to resources, to health, meaning like the company supplies the same desk at your house, the same computer at your house, the same internet access at your house, all that kind of stuff. The tech support is there. Doesn't matter if you're in the office or here. But you can't have two policies, one for remote workers and one for office workers, and expect to have everyone treated the same. You can't. They're two different systems. So you have one system, everyone is a remote employee, and everyone gets the same. That kind of stuff is pretty interesting, and we'll see where it goes over the next even 5 years as these companies figure it out. So did you know? So I did some research on that paper, and 68 or 70, let's say 70% of all businesses feel like remote workers are the wave of the future. And that's based on last year, not COVID-19 time. Last year, they're like 70%. No, it's the wave of the future. They're already testing the model. They have the technology, but they don't have a corporate policy for it. It was something like 58% of the companies that are already employing or deploying a distributive model for their company. They don't even have a company policy for it. And now with COVID-19, they're like, everyone works at home. But they don't have an answer like, well, what if I fall down and hurt myself? Do I get workers' comp? So it's very interesting. All this has to be worked out. So Kiwi at the top of the range here, it may fall down, and if so, it will stay in the range for a long time. If it breaks out, this is going to be, I think, indicative, slowly indicative of the rest of the year. Okay? Yeah, pound I don't even want to look at. So I guess we can do some dollar pairs. Okay, so we're stuck here. Not a lot to do, really. I mean, that's why it's Babel Day today. I mean, we already drove it up. So this is kind of interesting because this is the big trade. And then I freaked out on Sunday, like, you got to, and then we sort of had this idea where this might be the next trade down if you're going to try again. And so I think if you were going to do that, you've already done it. And maybe if you're lucky, there's a second chance here. But I don't know. See, I am bearish on US dollars. So it'd be one of those things like you'd have to be bearish on macroeconomics, which you might be because you were here. But I think a lot has changed here, and you might be taking that into account. And if you were going to do it anyways, you probably already did it. So this might be maybe a Friday front run. Maybe it gives you a double top and a drop if you're a bear, if you're risk off macro. We're not right on, my friend. I appreciate that. Well, Peccary says, when is the break enough? Well, check this out. This is always going to happen, right? So it's not the break. I don't care about the break. I care about the pullback. Okay? I don't care about the break. I care about the pullback. Okay? So this to me is irrelevant. This is relevant if you're a bull. Yeah, and remember, Cave, as soon as you get back from your 8-week vacation, then you go on strike. Ron, Samuel, congratulations, guys. Okay. So you're like, well, Wayne, which one am I? Like, I don't know. Are you risk on or risk up? I'm sort of anti-dollar, and I was very unimpressed with the Bank of England. So I'm not really, but if you're risk on, okay, then, this should have been obvious days ago. If you're risk off, I mean, we talked about it Sunday and it's Thursday, right? So you should be basically setting that up now, or actually be already in it. So now that we're in the middle, I'm like, well, you're about 8 hours late. So I don't know what you want to do now, right? I mean, you're like 24 hours late on this move, and you're 8 hours late on, or almost 12 hours late on this move. What do you want to do now in a 15-minute chart? Like, Wayne, why are you talking so much? I'm like, oh, well, you're already in your trade, so what am I going to do for you? Okay. Illusions never change into something real. I wish I remembered where this was earlier. So what is this 4 hour? Yeah, so nothing's really. So we were waiting for a break. This is moderately overbought. But again, up, a little further up actually would be very longer term bullish. Okay, that's the next take profit zone if it breaks. And you can see that would be 2 standard deviations from the mean. So that makes sense. So some people are measuring it this way. So we talked about this in the live trading room last night. Some people envision this way, which is fine, which is acceptable. And then I'm measuring it sloped, where there's more chance of an up. Okay. So this comes to, like someone said, like a break, right? So I would look at this upward move as not a break. And someone else that's measuring this sideways would see it as a break. So they're thinking this, and I'm not certain of that yet. I might be thinking more like this. Right? Does that make sense? So they're both correct. It's your alpha, how you decide to interpret this. Okay? So this is more bullish than bearish. And this would be neutral. Okay? And I describe this as, my interpretation is I want to be bullish. So I'm going to want to interpret this as a trend. It may just be sideways. And if you're not certain, then you're going to see it that way. Perception creates reality. So I'm filtering this with more up than down. Okay. Now I say I want to be bullish because I know it can do this. Okay. So I'm not stubborn. I know what I want, but I understand what challenges may lie ahead. And I want my trading to be real. I don't want them to be a series of unfortunate events. I don't want to buy as it's dropping. Right? Yeah, let's look at Bitcoin. I already did oil, so I think I have it over here. You can do some Bitcoin. Okay. And that looks like risk off at the moment. Okay. I wouldn't call that technically bearish, but a breach at this price definitely set up your short if you were going to do that. Okay. So I'm going to interpret this as still some sideways. But you understand, like, I think this had to do with measuring real bodies to show you how to be a bull. And then, of course, a breach of that would then set up, the bearish move. And so now I would say we're at support, and we'll have to see what it's going to do here. Okay. But this line, I think, was telling you stay bullish as long as you're above that. So every time it's dipping, you're buying, right? And all that kind of stuff. Now that you're down here, okay. But because I see this as support, I would use, like in this situation, again, I draw it with my mind, but if you can't do that yet, then insert a tool and use your oscillator, because that information is relevant if you're on support and you expect up. You would confirm that with an oscillator. If you were not at support, it'd be irrelevant. Okay. Okay. So it is not oversold yet. Okay. Remember, the white spot is actually the support. Okay. So ideally, this becomes oversold, whatever time frame you prefer to use. Ideally, it becomes oversold in this white area. Okay. And then it turns up. So to say it differently, you know, there's no bullish move here. You see that? That's bearish, that's bearish, that's bearish. Okay, this is just barely, but that's definitely as well. Okay, so the key to all of this, for example, is, well, first of all, you need to know your bias. Second of all, you need to know if you're at support or resistance. Okay, so like, we'll look at this one, and actually, let me move it just over. Okay, you can see at that moment, it was at resistance, that exact moment. So that's a legitimate sell. Okay, you look at this one, and it's overbought, but are we at resistance? No. Okay, I'll move it so you can see it. See, we're not at resistance, irrelevant. Okay, next time it's overbought and drop. Okay, and it is at resistance, so that one's good. And do you buy this? No. 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 So there's no buys that whole period. But if it does this, and we're down in here, let's say, that is a buy. Even though it's an aggressive buy, you're at the bottom of a sideways channel, but at least you have permission to think this and get back to the top of the channel. And now if you're a real bull, you're thinking a breakout above through the channel, right? So like your buy zone is 9,100, and that has nothing to do with this. Okay. This setup says if it's going to go up, it's going to go up here. It's going to go up that way. And we're not even going to get close to 9,100. So let me see about 9,100. How'd you come up with 9,100? $9,100. Why is that? I don't see it. I can see 9150, and essentially that's what I'm playing. It still is the same thing. So if this comes down to 9,150, and then I get my oscillator rollover like this, yeah, I'm going to take that. 91? You're not playing this. You're not playing this. You're not playing the pivot. You're not playing the real psych level's 9,000, even though that looks irrelevant. So how'd you come up with 9,100? Do I use divergence? Sure. But usually you see it other ways, okay? The funny thing is, by the time most people spot divergence, the trade's already on. You should already have known. I mean, it's one of these things. You should be able to anticipate divergence. So traders that are trading divergence didn't anticipate it because they waited for the divergence, and by the time they saw it, they probably have given up a significant part of the move. So I'm like, Well, crypto is basically the same, but it's not technically the same. Like, I get it. If someone said 91.47, I'm like, okay, I get that. You're playing the pivot. Okay, that makes sense. Or they say, I'm going to take it off this resistance, which is there, and there. And so that's 91.62. 91 it just seems like, I don't know, a little bit too roundabout. Okay? That's all. I'm trying to understand. That's all. I'm not belittling. I'm trying to understand why. Yeah, it's a nice round number. And that's irrelevant. 9,000 is a better round number, but he didn't say 9,000 either. Okay? Yeah, you know what I mean? Yeah, yeah, yeah. Yeah, I mean no harm by it. I'm just looking out for you guys, make sure you're just not like throwing down trades. That's what it feels like. Like, 91. Okay, well, I'd like a little more than that. I mean, it could have been let's say a daily pivot point, and I'm not seeing it. I'm like, okay, well then that's good too. That's an easy answer, right? No, I know, I get it. I see what you're saying. I'd like you to be a little more specific though. And you know, like 9,100, 9,200, 9,300, those are not really psych levels to me. That's right. So I'd say 9,000 is a psych level. 9,500 might be a psych level. 10,000 is a psych level, right? You know what I mean? Cool. Well, so anyways, happy Babel Thursday. It's just a lot of things. We're kind of done. Like in the live trading group, a lot of our trades were done yesterday or the day before. Like the money's made. We're already out of the market. There's not a lot to do except set up next week. Like we're done today. We were done today, yesterday, and now tonight we're going to meet to set up next week's trades. So this was a Babel Thursday. I mean, we're already done. What else is there to talk about? So we talked about economic history. So maybe at least it was interesting and intriguing. But that's that. Yeah. Well, it'd be silly for me to do a rah-rah speech and get you into a trade. But where did we start, though? Let's wrap up. Like, was it really a total waste? So I started on WTI. Oh yeah, this one's blank. I have to get rid of that profile. We must have been here then. We started today on WTI. I opened up WTI and we stared at it for 20 minutes straight without me doing anything else. Okay? And what I described yesterday was at this exact minute, this was last night. So this was at 5 p.m. yesterday. So 13 hours ago, I said, be here at this exact minute as a bull, because the trader was a bull. So I said, be here at that minute, okay? And within an hour or two, you'll capture more than 50% of the average daily range. So we went from 32 to 32.92. So what's the average daily range? Cave, look in the description below. There's a link to MetaTraders. Cost you $5 to get those tools. Does anyone know the average daily range right now of WTI? $3? Is it really $3? Then it's really booming. So we're about halfway there then, right? A quarter way there. Average true range, do you prefer ATR over ADR? It's funny, Google doesn't do very good. I pulled it up, average daily range, and just gave me prices. All right. $2.93. 100 days is $2.21. 50 is so it's really somewhere between 250 and 3. So yeah, so let's say you'd want to make $1.50 on oil in the first couple of hours. So we got more than half. Well, we got a decent start. So if this isn't a breakout day, then if this might be a below average day, but nonetheless, at least I got part of it right. And so now someone's going to need to buy it. Okay. And so the stock market's open now. So really, the volatility of the open is done. So hopefully it moves up. You have to take all the training courses, Williams, and then you pay some money to get in. So go to fxbootcamp.com. Right now there's an 80% discount. Okay. So sign up for the training courses, and then you'll be made an offer you can't refuse. Yeah, Sesson, it was right. 293. Okay. For the 14-day period. The problem is that's based on 92% overbought. Okay. 92% overbought. The 50-day is 72, so 50 days more average, and that's 2.62. So yeah, so I'm going with 250 to 3. Okay. Hey, Daniel. So this is important for the rest of the day, or it might be a break-even day. Okay, we should stay above this range. So maybe if you were long here at 32.32, I don't know, maybe you put a stop just below 32.50 and you pick up some money. I don't know if you like that, because then it kills your average winner. So you might just put this break even, and when you trade oil, you say, your minimal acceptable performance for oil is $1. You know what I mean? Like if you can't lock in 1/3 of the average daily range, then it was a pretty miserable trade to begin with, right? Right on, Daniel. So that's going to be sort of a risk management issue for you. So I hope you appreciated it, though. And I'm going to jump. So thank you for joining me for Babel Day. Peace on earth. May the pips be with you. May your profits be above average. Please like, please subscribe, and look at all the wonderful resources available in the description below. And please thank Traders Way by visiting tradersway.com and opening a